Boom. What's going on, everybody? 360 Digital Closing Bell here for a week ahead podcast here in this gorgeous October 5th, 2020. I think it's like episode 53, so we are slowly becoming an old man right before our very eyes. Um, we are recording this at about 6:33 a.m. here on this Monday, as I mentioned, October 5th, 2020. I am your humble correspondent, Michael Taylor, joined by the executive producer of the show, the purveyor of the show, international news aficionado, director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How are you doing this morning?
It's a beautiful day in the neighborhood, and we got a busy week.
We do have a busy week. I'm actually going to be popping around the country. I'll be coming to you Thursday, Friday, maybe Wednesday. It really depends. From Washington, D.C., so I'm actually excited to say that on the show. I haven't got an opportunity to say that in a while. Been saying too much Denver. It is going to be a busy week. I mean, I actually thought this weekend in terms of actual news was really light, which is nice because there's some really interesting things that actually dropped on the terminal this weekend that I'd love to cover. Stu's got some interesting stuff on the international news. As always, we'll cover what happens with the levels for oil field. But first, guys, as always, the show is brought to us by the world's greatest website, oilandgas360.com, the place for all of your oil and gas news, oil and gas finances. I mean, seriously, guys, there is no better place to go if you need anything for energy news. I mean, we're like fourth on SEO for oil and gas news. We're almost getting there for energy news. It's unbelievable. It's really, we're running so much stuff. So highly recommend checking everything out. You go to 360 News Desk, bookmark that page. It's on the top page. It's on the top row. Go to 360 Energy Expert, hit the drop down, go to the 360 News. The place if you're interested in just U.S. oil and gas news. It's going to have all your top stories, all the charts you need to know, all the equity overviews tables. We're going to be making some specific changes. We've also got dashboards, as you can see on the homepage now. Drop down. We've got production. We've got E&P finance data. We have ESG data. We're going to have debt data here coming soon. It's a little difficult to pull off the terminal. It's actually wildly difficult. They make that debt stuff really difficult to find.
And worldwide rig counts, and so you did me some goodness by including worldwide numbers. We got OPEC.
We did a lot of worldwide numbers. Now, for that stuff, you're gonna have to go behind the paywall. So we don't just give that stuff away for free here. But it's really good. I mean, it's like $60 a month. I mean, it's a steal. I don't pay for it, but because I get one for free, but I would if I could.
You're offering half of it.
Exactly. I'm building the thing. I mean, they're really good. I mean, you're not getting the well by well data that, if you're interested in like, say, more hardcore data analytics, this isn't like we're going to give you well by well data. There are other companies that do that. Trust me, I don't want to be in that business. Sorry. If you are interested in some of that well by well data, I know I've gotten a couple of questions. I mean, it's just my buddies who listen to this show. So they asked me if we're going to have well by well data. We're not. But I'd love to hook up. And one of the things I want to talk about this, Stu, is we got to figure out an affiliate program. Go to one of these well by well data providers and set up an affiliate program so that we can market, that we can sell this data through our dashboards. Because I mean,
figure that out. Yeah.
Because it's easy. I mean, it's just no cost. You just, if we push people to your site, 30%. It's very easy.
When I was at dinner with Alan, founder.
Did you actually have dinner with him? Because I want my DI login.
No. I was teasing you on Friday.
I know. I was so excited because I actually thought we were going to get, because I'm telling you, they're like a corporate sponsor of Entercom who owns this show, basically.
They are.
We can't get a DI license. What's going on here?
Michael, I haven't talked to him yet.
I know. I'm not talking. I'm not yelling at you. I'm venting through you.
Oh.
That's something Aaron. How has Aaron not brought that up?
Oh, that almost sounded like a date. You're venting through me. Holy crap.
Yeah. So, it's been a wild morning. But no, seriously, guys, check out everything on the oil and gas 360.com, the best place for all the energy finance. There's also the best energy thought leadership podcast, the Energy 360 podcast with Stuart runs. Stu, what's up? What's coming up this week?
Well, we have Aegis. It did not get pushed out on Friday, so it's coming out today. We had a few...
IBM has been slow.
Do what now? Oh, yeah.
IBM has just been slow because you tried to upload that Thursday.
Yes. Kind of had some technical issues. We also have our young friend up in Canada, and we have a few
Casey
other.
Johnson. We got to get that out.
Yes. Neat story. So,
Steve
yeah,
Reese.
Steve Reed, we got to get that.
State of the midstream.
Yes. Oh, that was a fabulous call.
Oh,
We
you're
had,
smart.
yeah, we got that one out. He's a soup. His whole team is very knowledgeable.
Well, and I'll give him credit. Scaling a consulting firm is tough because there's low margins, especially because you get more work. Generally, you have to hire somebody or give it to somebody. So the fact that they're crushing it, I mean, really, it's a testament to them and good for man. Reese Midstream Consulting. They busy.
Very and what's fun is they are right on top of the LNG transformation into higher. They're on it. They are knowledgeable consultants.
They are. Hire them. This is more free advertisement. Holy smokes.
Yeah.
We're giving away too much free stuff here. Check out that podcast, Apple Podcasts, Spotify, oilandgas360.com. All right. I mean, it was light on the news. We'll get to the news in segment 2 here. There was two things that we've been talking about borrowing base and redetermination season coming up. And as we move into quarter 4, October 1st starts quarter 4. So now we're starting to read some of the tea leaves that are coming out. One, I saw in the terminal this week, Stu. Exxon's prepping for a third quarterly loss in a row. And it's interesting. That's a super major here. And I saw a really, really interesting research piece that kind of covered some of the redetermination, really the borrowing-based redetermination liquidity risks, and looking back at what happened in the spring for the redetermination and what does that mean going forward, because October 1st starts this redetermination period. So to kind of give you an idea, so what is a borrowing base? So there are kind of two different categories. They were called bank commitments, and then what's called a borrowing base. Bank commitments are what a bank is committed to loan you. Now, they haven't loaned it to you yet, but they've committed to loan it to you if you want. Now, this can be in form of all different types of stuff. Reserve-based loans, second lien loans. The bank went out and partnered with the private equity firm to get capital. I mean, these bank commitments can be multiple different varieties. When you talk about a borrowing base, that's specifically what we would call a reserve-based loan, or what is based off your PDP or PDP. Sorry, your proved produced reserves. Reserves that you haven't produced yet, but that you've proven exist, so that you can actually put a tangible value to it. It's sort of the only way you can probably really, I think people get a lot of this PDP gets a lot of heat, specifically on Twitter, because of the way it can be done. And we're sitting on an interview with Scott Sheffield, when he not Scott Sheffield, shale specialist, who was a former Pioneer guy who, sort of pun intended, pioneered all of this, shale modeling and all that. Even he would say it's kind of a scam. There's some of this, you can really inflate the numbers here, but that's how these redeterminations work. So kind of give you an idea, the largest driver of a producer's borrowing base is the size of its proved developed producing reserves. And the lower you spend on CapEx, the less PDP you're going to have, because you're just not going to be able to go out and prove. You have to drill wells in order to prove PDP. So when oil price gets cut and CapEx changes, in this case drops, yikes, that PDP number is going to go down. So all these companies are reducing their PDP clearly because they're spending less. I mean, to give you an idea, they did here's a 1, 2, 3, 4, 5, 6. We got WPX, Southwestern, Cabot, Range, PDC, Parsley, Antero, Diamondback, Gulfport, all over 25% cut in CapEx. Yikes. And and when we know how oil wells decline, whoop, exponential, baby. Not that fun. It's not that fun. Wish you could get a little more life out of it. So what does that mean moving forward? Well, I think before we look forward, I think it's best to see what happened in spring of 2020, because I think that gives you the best idea. So in spring 2020, COVID was just getting there. remember, it's, COVID hit. I'm trying to, it came on quick. I think it was middle March. I want to go March. I remember this pretty well because I was in the middle of the move. I moved from California just in the nick of time. I got out of there. Holy smokes. Because when I drove on March like 15th from San Diego to Colorado, there was like no masks. I remember like masks weren't really a thing yet. I remember then that was like a Thursday. I remember that Monday, because I'm on the work grind, I had a lunch meeting set up with our boy David Forsberg, downtown Denver. We went on 16th Street. We walked down to Rock Bottom. Nobody was in there. The next day, everything was shut down. So I'm gonna go with like March 15th as the COVID cutoff. Redetermination happened before that. So to give you an idea, when I read off these spring redetermination numbers, they didn't really have full COVID priced in yet. We didn't know there was going to be 9 million barrels ripped off the market fairly permanently, not permanently, but for 2 to 3 determinations. So let me read you this, dude. This is before COVID. Look at these redeterminations. Antero, fall 2019, 4.5 billion. Spring 2020, 2.8 billion. 37% downward shift. Callan, well, they've bitten the dust. 2.5 billion, 1.7 billion redetermination. That's down 32%. And they were already, and then we'll get up to how you were leveraged, because the next part of this is how much of you have that utilized up for redetermination? Because what happens if they cut your borrowing base by 30%, but you were 80% utilized? Well, now you've got 6 months to pay that bad boy off, and they get a nice little interest rate off that. All right, continuing. Chaparral Energy. Well, they're Dunzo McGruber, but they were at 325 million, redetermined in spring to 175, 46% drop. That'll kill you. Comstock, Jerry Jones, they actually were only down 7%. Diamondback, Range, and WPX were the only 3 companies on this list of 25 that they studied who actually didn't have a change.
Wow.
Oasis was down 52% though. Laredo, they were down 24%. Woof. So what does that mean? Before COVID, companies were already getting their budget slashed. This wasn't something, COVID only added fuel to the fire. We've been saying this for a while. So clearly that means there's going to be some massive redeterminations that start coming around the corner. And I think the key is what companies are at risk. And so how I like to look at it is, and you can really pick any number you want. And remember, we do math on napkins, but I was able to actually use some sophisticated tools for this. But you can pick any number you want, Stu. You can pick, 50% utilized. You can pick 80% utilized. I go with 65 just because I think that gives us a good list. There's over 25 companies that are at least 65% utilized between their borrowing base and the amount they have outstanding on that.
Ooh, yeah.
Now, I'm going to read you some of these numbers, and then we'll read over bank commitments, because that's the key. Some of where not all of that doesn't mean all these companies are in trouble. We'll start out with, this is the first company that comes up for 100% utilized.
Yeah.
We love these guys, but Ring Energy, $375 million borrowing base. They're $375 million outstanding, which means they've 100% utilized. But they're borrowing, their bank commitments up to $1 billion. So not to worry.
The one thing I will say about Ring is that they're less horizontal and more conventional.
Yeah, but what I'm saying is when you read these numbers, we're going to read the amount outstanding in the borrowing base, and we're just going to go down utilization. You have to then, now that we look at all these utilization numbers, you have to weed out the ones that have no more bank commitments.
Right. That's
where you get in trouble. That's when Oxy has to go to Warren Buffett because they're out of bank commitments, and now they got to pay 8% to Berkshire. No, I mean, this is how it's so. Highest utilized, Lone Star Resources. Makes sense. 127% utilized. They had a borrowing base of 225 million. They had 285 million outstanding as of bankruptcy.
Ooh.
Midcon Energy Partners, properties, 114% utilized. Panhandle Oil and Gas, 100%. Abrejos Petroleum, 100%. Oasis, another one bites the dust. They were 96%. Contango Oil and Gas, Love those guys. Ticker symbol MCF. It's not good though. 97% utilized. They've got a decent borrowing base though, or bank commitments, excuse me. Callon Petroleum, 86%. Northern Oil and Gas, love those guys. They're 86% utilized. So now we have to look at bank commitments, and I'd highly recommend doing that. So about, to give you an idea, the companies on this list that would scare me, Rattler Midstream, they have a $600 million borrowing base. The amount outstanding is $523 million. So they're 87% utilized, and their bank commitments are only $600 million. So these are people who are in trouble. Yep. That's a sign of trouble. Another company. I would say, Amplify Energy is in a precarious position. They have 400 million or 450 million in bank commitments. 280 million of that's a borrowing base, and 256 of that is outstanding, which is 93%. So to give you an idea, 30% cut of this is where we need calculators here, because now I'm just doing it. I need a little bit. 0.7 times 450. Yeah, I mean that puts you close. That puts you really close. That puts you at 315 million for that puts you at a $350 million bank, or excuse me. Yeah, you're in trouble basically. Right. It's if you now maybe the redeterminations won't be as cut, but we'll see. So now let's move over. So those were the most highly utilized credit lines. Let's just talk about largest borrowing base facilities. Okay. Cabot Oil and Gas. We love these guys. Largest borrowing base facility in this peer analysis, 3.2 billion. Utilized 0 of it. Nice. Good for them. Now, number 2. This isn't good. Antero Resources. Borrowing base, 2.8 billion. They've utilized 63% of it. Ooh. Also, when I pulled them, I have a setting set because I always, when you're pulling debt numbers, you always want to know what is their debt trading at, because what someone's debt is trading out in the bond market is a great indicator of what the present value of people's debt is. So I always set a custom color on the terminal to if it's distressed, and there's a certain category for distressed bonds, because they have to categorize debt, whether, what's the bond rating on that. It was A plus, B minus, all that jazz. They pulled up as red. So their current debt's trading at, not good. I'll just say it's trading at a distress, as what we would call a distressed price level. So
good technical term.
I mean, you can go. Just go look. You can, again, distressed. When I say that's their level, you can pick whatever levels you want. I picked 65% utilized just because I don't know. Looks like some of these companies were getting slashed by 35%. Cool, 35%. You know what I mean? Just I'm a risk guy. I pick a bigger number because it's just what I do. So for these distressed prices, this is just their bonds trading at some point throughout it was trading at junk level, which eek. Parsley Energy, they're next on this list. They have a $2.7 billion borrowing base. They've only used about 16% of it though. So, and why do you think they're the talk of getting acquired? If you're on Twitter, everyone thinks Pioneer's buying Parsley. Do you think it's going to happen, Stu? Natty bailout, son.
Yeah. Before 2020, I used to make some decent predictions. I got nothing this year.
Yeah. No, I mostly I do think it's the acreage is similar. Now I do think there's some weird stuff like how much did the Sheffields own of Parsley versus it's a convoluted story here. I mean, now it's nothing illegal. It's just I mean, you bring on this acreage, or what's going to happen to these Parsley employees? They're going to get axed. You know what I mean? There. So, when we talk about mergers and acquisitions, you always got to remember about. But that's just rumor mill here. We don't know what's going to happen. All right. So other borrowing bases. Callon had a big borrowing base, but their debt's trading at distress levels. 1.7 billion. They're 86% utilized. Hillcorp, you don't talk about those guys a lot. It's because they're probably dead soon. 1.7 billion. They've utilized 75%, and their debt's trading at distress levels. It's just PDC. Now, the only reason this is because I looked up this one because this one shocked me. This is because of, and this is the only reason. I jump ahead here. 1.7 billion for PDC Energy, 655 million utilized, so only 50% utilized. Why is their debt trading at distress levels though? Senate Bill 181. We've been covering it. The 88, it's like 89% of their usable acreage falls within that 2,000-foot setback law.
Yeah.
So I don't care how good your acreage is when the United States, when a government comes in and says, you just can't drill there. Whoops. Yeah. Dunzo McGruber, as we would say back in the day. So it shocked me, but it's true. And when you look at the numbers, it literally was the day it just touched on those the day both the hearing was held. It was like, early September. And then last week, like Tuesday, when the actual vote came out, it was like the 2 days it touched. We love those guys, though. So what does all this mean? A lot of numbers. I think the biggest thing that this means is there are a lot of companies out there that are kind of holding their breath right now. And if the bankruptcy season, in my opinion, is not over yet. I think if it's going to go through quarter one of 2021, because to give you an idea, Callan got redetermined by 32% in spring 2020. That was a sign they should have probably declared bankruptcy then. But what do people who own companies do? They hang on to the bitter end, which is fair. I do the same thing. I'm not knocking these. I hold on to the bitter end too. Exhaust all options. Why, you don't just want to throw in the towel early. I mean, sometimes, So when you talk about these redeterminations come in, this is going to affect, I think, companies as we move into 2021. I don't think a company's going to get redetermined and then we're going to see a downfall right now. I think there's at least a 3-month lag between when something gets redetermined, because should Antero declare bankruptcy? Probably. Like they and does that mean they need to completely rebrand and something? No, they just took a little too much out of the credit card. Happens to everybody. Happens to everybody, and maybe, so all that's to say, we'll be following this redetermination stuff closely because this is as boring as as this little segment was. I think it's important to know, all right, what companies are heavily utilized, what companies have large borrowing base facilities, and what does the outlook actually look like? And it's going to be at least 20 to 25% for the big boys.
Yep.
So, all right, Stu, what do you got on all this? I've talked enough here.
Well, you know how we measure, there's AC and DC or BC, before Christ and after, so you sit there and look at after, before COVID and after determination. So we've got 2 new terms here for a timeline and setting new timelines in financial history. BC before COVID, AD is after determinations. Well said.
I like it. That's too witty for this podcast. It's too witty for this podcast. I think the other thing that I saw was really interesting, really was this leaked Exxon plan, but I'm going to let Stu go ahead and cover that when we get to the international news desk. What does all of this redetermination mean for, if you're looking to invest in oil and gas? One, look at distressed debt levels. Clearly, if you're a retail guy out there, hey, I want to, throw $10,000 in the energy sector, buy low. Okay, there's names out there that might get you there. Who's to say we're at the bottom? But also go look at distressed debt levels. Find companies that, one, are underutilized. And I don't care if it's shale, conventional, I don't care. Find companies that are underutilized. Find companies that are, and find companies that are not trading at distressed debt levels. Outside of, once you've eliminated all of those, then you just go through your normal stock picking strategy. Okay, where do I like this price? How long do I want to be in this? Because if you want to be in a trade for 20 years, yeah, I mean, you could probably gamble on a couple oil and gas companies. You have to be 20 years, you're going to hold this time frame. Yeah, I'm sure there's a couple companies out there that are trading right now. They're going to go up. It's just, in the aggregate, Dave Portney's right. Stocks do kind of always go up. Now, that's in the aggregate, not in the day by day. You know what I mean? So just be careful out there. And, the last thing you need to be doing is investing in, Rattler Midstream. And in 6 weeks, they're bankrupt. So just look at distress trading levels. Go look at amount utilized. Go look at how much their bank commitments are. Help yourself out. All right, Stu, international. What do we got?
Oh, I was exhausted last week.
You sent me like 9 stories this morning.
Over the weekend, this is absolutely, we've talked about Club Med, the huge Mediterranean gas fields from the Leviathan field, Cyprus, Turkey, all that. Turkey's been getting their hands slapped by OPEC and everybody else. Well, here we have the Prime Minister of Turkey. If you'll see on my technical screen here that we've got.
Wow.
Yeah, they got a second drilling ship going out. And so what that's telling you is that Turkey's not done poking the bear, so to speak. So they are really helping Libya. Libya is just going bonkers, driving everybody nuts by they've been doing 300,000 barrels per day. Yep, so OPEC is just like, what do I do with this puppy? Beat him, roll up a newspaper and beat him in the nose. So anyway, I just thought that was kind of funny that they're launching another ship. Hey, a couple things here. There was a good op-ed over the weekend about $100 billion worth of big oil divestiture coming. Michael, if you're a bargain basement, do you go to garage sales?
I don't. I wish I could say I was a thrift garage store guy. I'm not. I don't buy anything really. I don't buy new clothes, Stu.
Well, no, you still are wearing like high school clothes, so whatever.
I am actually. This is not high school, but I've had this for a hot minute.
Oh.
I've had this shirt for a while, going back to college at least.
Oh my goodness. Well, everybody does. But energy transition, we have BP, Shell, we got all the majors. They're dumping. They got a plan to go to become electricity companies. They're looking at that whole kind of a thing. And so when you take a look at this story from Shell, it was pretty amazing. They are going after renewables and dumping their heritage. Now, there's some tidbits in here. What they're doing is they've gained so much control around the world from oil governments and other countries that the governments like Nigeria and all of the other poorer countries are having to have to pick up the slack where the majors were. So I'm almost good that they're doing it to give more control back to the countries that they've been robbing from. I mean, not that majors steal from everybody, but I think it's great that countries are trying to force their way back into energy independence. And this is actually a good way to take a look at it. So,
I mean, I think that, like you mentioned, I think there's definitely been some oil major abuse of power in some of these countries. And so it's nice to see them take back. And as you mentioned, it's the quickest, you want to talk about how to get a country out of poverty, become energy independent, give your citizens, give your people low cost access to fuel.
Lowest cost kilowatt per hour.
And scalable.
scalable. I mean, we love our Indian management and government. They're trying to do that. We love India. I mean, they're just trying the best they can. But this brings up ESG. And another tidbit came out this weekend, a very large tidbit, more like a boulder.
Yeah.
Uh, you and I have been talking for a long time about ESG and how MiFID II. Let me back up and give you a little bit of MiFID II
Yeah,
here.
educate the class on MiFID II, because to be honest with you, I don't even know what this is.
Well, let me show you another technical graph here.
I'm ready for this.
Podcast listeners, if you notice, Vanna White is holding up MiFID II. It is an oil and gas.
Can I get a B? I'd like to buy a vowel.
She looks a little better than I do, but when you, she has better hair. So when you're looking at MiFID II, these are the financial regulations that have been coming over from Europe to the United States with a couple major goals. The major goals were to offer more transparency in investing. Now, they did not have much ESG requirements in there. The big deal was there were three major things. Broker dealers may receive research payments on money managers and hard dollars. Money managers may continue to aggregate orders on mutual funds. They had some specific details that were lined out that like the big investment houses could no longer have investment conferences and then pay for everybody. So anyway,
Interesting.
MiFID II. Now, we've been talking about MiFID II ESG being blended into MiFID II requirements, and sure enough, here came the articles this morning from the Times Malta. ESG standards are being put into the European, the EU MiFID II requirements. So ESG is really going to become more and more important. So as we take a look at what's happening in the US with ESG, investors and consumers are requiring ESG. No ESG, no access to capital. Here's what's happening with ESG in the US. Michael, you and I are talking about their biggest problem with ESG is the how do you measure peers in a market with no standards? So standards for ESG are being folded into MiFID II into Europe. Standards for ESG are coming through, and we as Oil and Gas 360 are launching our ESG dashboard behind the paywall. And so all of this is intertwined, Michael. And did I get you all bored? You just waking up?
No, I had to stretch.
Oh, okay. You look like Yogi Bear stretching out of his bear cave there.
I'm listening. This is good stuff.
Oh, I was like, okay, I need to move right along. So when you sit here and take a look at okay, what's your favorite term?
My favorite non-GAAP term?
Just non-GAAP. You and I both think non-GAAP is a way to hide money.
100%.
And it's a way to hide your ugly baby in your financials. So one of the things that we're taking a look at is there's non-ESG standard language out there. Everybody says, oh, ESG, but there's no standard for ESG. Now, everybody and their dog is going to be throwing out things that go, these are now standards, and they're not going to be applicable per industry. So just buckle up, get a flight suit on, get a pair of Depends. This is going to be nutty while we go through the standardization of ESG terms.
Yeah, and I mean, you bring up a really good point is what are going to be the standards? If this is going to be a requirement for companies to have, what are the standards? And I think that's as this becomes more of a not just a talking point, but a actual seriously consideration from investors as it is. I mean, we will see how that plays out, but you're going to have to come up with some sort of, as you mentioned, some way to report all this stuff
Well,
and make it standardized. How do you do a peer analysis? And, I know there are data platforms out there that do that, but it's all very, I don't want to say it's either too quantitative where it's just a number. Let's give a score and see what that score is compared to somebody else, or it's too qualitative where it's, here's just what this company's doing and here's what this company's doing. There's no way to mess the two.
oh, absolutely. And it's going to be a nightmare. Now, good management, good numbers, no ESG, no access to capital, and now no ESG, no scoring.
Yeah.
This one we were ahead of the curve on the tying of ESG to MiFID II. We were ahead of the curve on that. Now, ahead of the curve on the determinations of how do you judge against your peers, I'm going to claim I have no idea.
Yeah, I don't know if I have any idea either. So I just think it's something that's someone is going to have to, someone's going to come up with that. Someone's going to figure out a way to do it, and it's going to be killer.
Oh yeah. Now the EU is got a board, and they're tying it into different boards. The ISO 9000 and everything else. They've got the ISO. I think it's the ISO 9006. I gotta go fact check myself, but I've read through those on ESG, and it's hideous. You're going to have to hire a whole team of people or a team of consultants to even try to understand half of the requirements coming.
It's almost like this law was maybe written by consultants.
That's a conspiracy theory that I think you're dead on, right?
All right. And since we've now ventured into conspiracy theory land, we should probably just move on to covering the levels for oil trading and natural gas this week. As always, guys, this segment is sponsored by Sandstone Capital Group. These guys do great research. Call them sandstonecg.com, 303-907-6825. Got to mention the podcast. It's great. You guys love them, but got to mention the podcast. Only way we get credit here. On the crude oil side, we saw late Friday. We recorded an early morning. What was that? We recorded an early morning podcast Friday that didn't get to cover really what was an absolute tanking in the price of oil. We saw $36.72, $36 we saw late in the trading session on Friday, which is not good. Luckily, pit opened yesterday night. By the way, speaking of the pit opening, as we mentioned, I'd be remiss if I didn't mention President Trump, as we mentioned on Friday, diagnosed with COVID, tweeting all weekend about how good he's feeling. Right before the futures market opens, this dude leaves the hospital, gets in a car, and goes home. Talk about a pump and dump, Stu. I told you on Friday this was going to happen. I even knocked my headphones off because I'm going so crazy. I'm telling you, Stu, I had this on Friday.
Hey, inside baseball for our podcast listeners. You ought to see him flapping his wings. He's like a baby bird jumping out of the nest. Trump can really affect the market.
It's unbelievable. I have been on both sides of a Trump tweet, both sides of a trade, where I've been in a trade, Trump tweets. Next thing I know, my position is 100% better. I've also been on the other side where he's tweeted, and instantly my stop has been hit off. I'm like, what just happened? So I've been on both sides of it. It's just crazy. Goes to the hospital as he sees the market slumping on Friday. Now, I'm not saying, again, not to venture back into conspiracy land. It's just convenient. Let's just say it's just incredible how he does this. Because the pit opens, and what does oil do? We're up to $38 now. Good news that hey, I told you on Friday, Trump was hoping to get better from this quick so he could prove to the world coronavirus, in his mind isn't anything. So he's at least trying to do that, and the markets think so.
Yep, I would agree.
So it's just
a cartoon about that, but we'll leave that alone.
And not to digress here. So as I mentioned, pit opens for crude oil. Oil's trading like 37 even. We saw it pretty, price action was pretty steady. getting us up to about $38. Some of the big levels I'm seeing for the week. I mean, considering we had our low level at 36.72. That got actually touched at about midnight, about 6 in the morning. Sorry. About this was about 6 p.m. or about 4 p.m. that Friday. So when that pit closed there about that time, reopened up at 37.06. So like I said, couple levels. If you're bearish, the downside levels from here are 37.48, 37.06, 36.72, and God forbid we get here 35.35. Those are kind of the three things I see is if you're trying to sell oil, those are kind of some downside levels. If you're looking to get into a short, anything 38.72, 39.15, 40.25, 40.60 are probably good levels for you. If you're looking to get long, let that thing ride down to 36. I think we're in a range here from probably 36 to 41. So if you're interested in day trading, which, if you can define a range, that's step one of trying to figure out and putting together a trading plan. So if you set a range and say, okay, I'm going 36 to 40. There's some levels on the downside I like. There's some levels on the upside I like. Again, I'm neutral this week. So my bias this week is 36 to 40. So if it's down at 36, I'm probably bullish. If it's up at 40, I'm probably bearish because I think this $38 level, when we look at the point of control for the week, 38.62. So I'm pretty, I don't see anything that's like, I think we're going to pop above that $40 level. Really 40.25 is got to be our max level here. But, opening bell here is in about 16 minutes. It'll be interesting to see. On the natural gas side, we're up about 3 percentage points. I think some of the interesting levels. I think there's a big chunk from $2.47 all the way up to $2.35. Remember, price action doesn't really work on natural gas. We're trading off weather. We're trading off supply numbers. So it's interesting to see what natural gas goes to. We'll kind of see how everything pans out. We'll be waiting upon. There's a lot of EIA driver data or fuel data that's going to pop out as we get into quarter four. They like to run a lot of these quarterly reports. That's going to be interesting to see what they see on the demand numbers. When we look at the commitment of traders for this week, it's interesting. As we've seen over the past couple weeks, as always, we run 2 weeks by, but we've been seeing a lot of these. We've been seeing maybe people kind of slowing down a little bit on the hedging end, and we know that's probably because a lot of these companies are, we've seen a lot of wind down because we've seen 3 companies go bankrupt. So you unwind the hedges on that point. So you see a lot of stuff come off the bank. What we've seen though is managed money, as we know, is mostly long. There are about 400,000 contracts on the long side to about 99,000 on the downside. But what we've seen over the past couple of weeks is then begin to add to that short position, which tells me the professionals, now, hedge funds generally don't trade oil that well, but the professionals, they think 40 is a ceiling. And I tend to agree with that thesis. So that's why I put my ceiling at 40, because each week I'm seeing more contracts. We got 9,000 this week added to the short side. So it's all about reading the tea leaves. That spread, the spread is only, the spread is, it doesn't even make me move there. So, we look at swaps, they're getting, swap dealers cut on the short side. The liquidation, people are liquidating a little bit right now, which, hey, taking some money. There's one way, if you want to raise money, sell your hedges. Is it smart? I don't know. Smarter people than me got to figure that out. Yeah. So anything on the U.S. oil side you're taking a look at this week?
More bankruptcies.
This week, you think? Ooh, any predictions?
I've got like 2, but I'm gonna.
Smart.
The prediction for the world, I'll wait till you ask me that one.
What's the prediction for the world?
We got 3 new peace treaties coming.
3 new peace treaties this week?
Before the election. I'm trying to get it nailed down to a better time window, and I'll try to get more data before I start throwing names out.
Interesting.
I've been accurate so far.
You've been good on this. You've
So,
been all over this.
yeah, we got 3 treaties coming out.
Oh, well, this you heard it here first, people. Spicy stuff. I think there's no better way to go ahead and finish up the show with that. A little breaking news from Stu. I like it. But seriously, guys, I am looking at the time here. It's holy smokes, we've been about 50 minutes here. Per usual, we've gone way too long. So we're gonna go ahead and cue the music and let you guys get out of here and start your day and start your week really off right. For Stuart Turley, I'm Michael Tan and the entire 360 Digital Clothesmill team. Thank you for checking us out on the world's greatest website, www.oilandgas360.com, iTunes, Spotify, and YouTube. We will see you guys this afternoon for the Digital Ticker.